Hi there! Rivian Automotive is about to report the results for the third quarter on November 7th, as you can see here. When they will release the results, the stock price will react. It will go up or down. If you know the future, if you can predict if the results will be good or bad, then you can take advantage of the stock price. If they report better numbers than expected, then the stock price will go up. You might see an increase like this, over 70% in just a few days. If you look at the analyst estimates, what the market expects, you can see that the revenue is expected to increase a lot in the future, from 4.8 billion to over 25 billion by 2028. Plus, as you can see, their huge losses over 4 billion, are expected to decrease more in the future. This is a good sign. But be aware that in the short term, if they report bad news, the stock price will go down or will be flat for a longer period. As you can see, year to date, the stock price is down 50%. And this is bad, because if you had invested at the beginning of this year, when the stock price was around $21, then your return would have been minus 50%. And this is quite bad. You can also see that the stock price was even higher in the past, over 100 or close to $140. So you want to avoid this massive decline and take advantage when is the right opportunity. So if you want to predict the next quarter, the third quarter, you can also look at their production and delivery figures for Q3. They released some numbers about the next quarter. And as you can see, they produced about 13,000 vehicles and delivered 10,000 during the third quarter. Besides this, we can also see that they are experiencing a production disruption due to a shortage of a component on the R1 and RCV platforms. As a result of this supply shortage, they revised their annual production guidance to be between 47,000 and 49,000. Plus, the company is also reaffirming its annual delivery outlook of low single-digit growth as compared to 2023. They expect the range to be between 50,000 and 52. Now, if you compare these results, first, let's take the number of vehicles produced and delivered for Q3 and compare them with Q2. As you can see, in Q3, they said that they produced 13,000. And if you look at Q2, the previous quarter, you can see that they produced 9,000. 9,600. So if you compare only this number, Q3 is better than Q2. But if you look at the number of deliveries, how many vehicles they delivered, you can see that they delivered 10,000. And this is the most important indicator. Not how much they produce, but how much they deliver. Because from their deliveries, they make money. From production, they waste money. So they delivered 10,000 in Q3, and in Q2, their deliveries were higher, 13,000. So you can see a decrease from 14,000 vehicles delivered to 10,000. And this is bad. Because when they report the results for the third quarter, the revenue won't be that high. The growth rate won't be as high as the market expects. It will be lower. This means that the stock price may be flat or it will go down after they release the results for the Q3. Now, as I said, besides this, there is also this shortage for their component, for their platforms. And they revised their production guidance. If you look at Q2, you can see that They were expecting to produce about 57,000 total vehicles for 2024. And more recently, they announced that the number may be lower, about 50,000, 52,000. So the demand has decreased compared to what they were expecting and also what the market thought about the growth rate of this company. And this happened due to more reasons: higher interest rates, a tough economic environment, and other things. Competition, for instance. So if you are planning to invest in this company and you hope that in the short term or next quarter the stock price will increase a lot, be aware of their fundamentals. Their lower growth rate than expected, and that the number of deliveries has decreased a lot compared to the previous quarter. Still, Rivian has a lot of cash on hand. They won't go bankrupt. They will survive. As you can see, in Q2, they reported about 7.8 billion in cash. That's a lot of money. And if you look at the market cap, it's only $10 billion. So they have a lot of money to fund their operations, even though they burn a lot of money. Now, of course, if you subtract their debt from their total cash, they'll be left with around 2.2 billion. You can see here, long-term debt, about 5.5 billion. So you subtract 5.5 billion from 7.8 billion, and you are left with around 2.3 billion. When you compare that number with the market cap, it won't look like the company has a lot of cash on hand. But still, they have the funds to continue, and maybe they can rebound their business to increase their production and the demand. If the demand goes high, they'll be able to sell more cars. And maybe they can achieve those expectations, what the market expects from Rivian. Of course, if the revenue reaches 20 billion in the next 5 years, the stock price can double from the current level easily, but only if Rivian reaches over 20 billion in revenue. If they can do that because of competition or other headwinds, you have to be aware of that risk. So far, for the next quarter, don't expect huge results. I mean, great numbers. The growth rate will be slower than expected, what the market expects. Because as you've seen, their number of deliveries has decreased, they are facing a shortage for their platforms, and they also lowered their guidance for the full year 2024. Maybe next year, the demand will go high, will increase, and they'll be able to get back to report a higher growth rate than expected, and also the stock price to increase next year. This may also happen, but you have to be aware of the risk when you invest and when you want to take advantage. And the most important, what company you choose to invest in. Be aware of this. So Rivian for the moment won't do quite great, as Tesla did for the last quarter. They reported the results, better profits than expected, and the stock price went up, as you can see here, 21% in just one day. This won't happen with Rivian. Sometimes you can make a return like this in just one day if you can predict, of course, if you can predict the results that they will deliver better than expected, then you can make 20% in just one day. But if you can predict, or you have some insights, or you read the fundamentals better than the others, you can easily see that there are low chances to see an increase of 20% for Rivian when they will report the results for the fourth quarter. So that's it for this video, and if you have other questions, please let me know in the comments.